I was recently asked, what is the difference between a real estate appraisal and the true market value of a home? Believe it or not, they are two different things entirely. There are a lot of home buyers and home sellers these days learning this lesson the hard way, so I've decided to provide a quick video to bring some clarity to this issue. If there's one practice that confounds both home buyers and home sellers alike, it's the fact that the majority of real estate transactions close at the mercy of an appraisal conducted for a purpose that most consumers do not understand. Understanding these differences will save you money when it comes to buying or selling a home, and it will help you appreciate the need and value of a real estate appraisal. But here's the kicker. The appraisal might not necessarily tell you what the home is worth in today's real estate market. Hi, I'm Joe Manausa, author of The Business of Getting Business and the creator of Manausa.com, where I have helped tens of thousands of people buy and sell homes. I would like to help you too. If you already are a subscriber, thank you and welcome back. If you're not a subscriber, please consider becoming one now. We offer the most thorough and accurate housing market reports on YouTube, plus answers to your real estate frequently asked questions, and we also provide virtual tours of some of the most beautiful homes in Tallahassee. Simply hit subscribe to get started and the bell so that you're the most informed buyer or seller in your next real estate transaction. So what is a real estate appraisal? An appraisal conducted by a professional licensed real estate appraiser is an opinion of value based upon certain conditions and a specified purpose. You see that last word there, purpose, makes all the difference in the world. That's right, there are different reasons why an appraisal can be ordered, and the various reasons will impact the final value of the appraisal. Does that sound like market value to you? The purpose of the real estate appraisal is seldom to provide the home seller with its current value in today's housing market, so it's important for you to consider the purpose of the appraisal if relying on its valuation as part of a decision-making process. For example, if a homeowner orders an appraisal for the purpose of securing refinancing to a lower mortgage interest rate, then one value might be recorded. But if the purpose is due to a pending sale, an entirely different value might be the result. The biggest confusion that I see surrounding real estate appraisals occur after a homeowner orders an appraisal on his home. When ordered by a homeowner, the purpose is usually to obtain as high a value as possible. The homeowner carefully selects the appraiser, perhaps a personal friend, with this in mind. This process of determining the home's value is very different from the process a buyer's bank will require once a contract has been ratified. First of all, the buyer cannot choose his buddy as the appraiser. The bank will have a pool of appraisers from which one will be assigned the appraisal order. The seller, the buyer, and their agents will not be allowed to select the appraiser. Second, the purpose of the appraisal will be to protect the bank, not just find the highest amount for which the home could sell. And you have to understand the appraiser's liability in all of this. When you order an appraisal for refinance, you've already lived in the home and are not highly likely to default on the loan. You have proven you will make the payments. But when you order an appraisal for the purchase, both you and the bank do not wish to overpay or overlend on the home, so the appraiser feels more pressure to be conservative. For this reason, most appraisals that I've seen performed for and requested by the owner of a property are valued higher than those performed for the purchase of the home by a buyer. For years, I felt like this was a bunch of hooey, that the industry was corrupt in saying that a home's value is different depending upon the reason for the valuation. I was thinking, what is the home worth? Period. End of story, right? How can you tell me it depends? But then I got engaged to be married. In the 1990s, I proposed to a young lady to be my wife. I did this without giving her an engagement ring. Back then, the cost of a ring was significantly higher in a small market area like Tallahassee than what you could buy in a big city. So my plan was to propose, get her acceptance, and then take my fiancée, Michelle, on a trip to New York City to visit the Diamond District. I figured the amount of money we could save by going there and buying the ring direct would more than offset the cost of the trip. A two for the price of one deal. Before the trip, I was schooled by my grandfather, who had become active in the diamond business during his later years in life. He taught me the 4 C's of diamonds. I prepared myself for evaluating cut, clarity, color, and carat weight, and I had a good idea of what I should have to spend for what I wanted. I departed Tallahassee feeling comfortable with what I should be able to acquire within my budget. One full day of shopping on 47th Street in New York City was all we needed. Michelle and I chose a stone, and the merchant urged us to go upstairs and have it appraised for insurance purposes. So up we went to an appraisal office, and this is what the appraiser said after viewing the diamond. "You have purchased a beautiful stone. I would say it has a retail value of $10,000, but I would insure it for $18,000. "Huh? It's worth $10,000? That's more than I paid, and I should insure it for even more than that?" This certainly smelled fishy. Think about it. I purchased something, they send me upstairs to an expert to tell me that I got a great deal. I asked them to explain to me how he could give me an appraisal with a value higher than what I had just paid 30 minutes prior. I mean, I know I'm a shrewd negotiator, but his explanation made good sense to me, and this is what gave me a new perspective for the differing purposes of real estate appraisals. Here's what he told me. He said that the diamond, or a very similar one, would retail for $10,000 right now on 47th Street in New York City, but I should insure it for an amount that would allow me to replace it should it be lost or stolen without me having to come back to New York City. In essence, he was giving consideration to replacement cost and convenience in his appraisal. He was not telling me that I could go out and sell it for $18,000. He felt the retail value was $10,000, and because I purchased it in the epicenter of the diamond trade, I got a really good buy and was able to purchase it below its retail value. This really clicked for me because it made so much sense. His appraisal was not about fair market value, rather it was a value determination that considered many factors and was primarily created for insurance and replacement purposes. Having sold homes now for 30 years, I can tell you that similar considerations are made during real estate appraisals. There can be a large difference between the market value as determined by active real estate agents and buyers and sellers versus a forensic value as determined by an appraiser. Banks require appraisals so that they do not overloan on a home. They want to lower their risk, so they required a licensed appraiser to follow a specific process to determine an appraisal value. Using this process, real estate appraisals are based upon data that is often 9 months old or even older. Some appraisals allow for sales that occurred 1 year prior to the appraisal being ordered. Now consider this. A home that closed a year ago might have gone under contract 15 months ago. Think about how far the market has moved in the past 15 months. Historically, we would expect a home to move up in value less than 5% during that period of time, but many homes have a fair market value of 15% more during that time. Even a home that closed 60 days ago might have been from an agreement signed 5 months ago. When seeking the current market value of a home, we want to know what's happening now. We don't need a forensic examination of past market conditions. Can you see how vastly different an appraisal can be during times like today when the market is moving abnormally? Recently, we experienced a situation where the market and the appraiser were not on the same sheet of music. We were hired by a home seller to market and sell their home. After a 2-week blast of pre-marketing, we hit the market hot and had quite a few showings in the first few hours the property went live. We received offers from 7 different buyers and told them all to bring us their highest and best offer. 3 buyers came back with above asking price offers. We did not accept the highest offer. We accepted an above asking price offer from the strongest buyer. And guess what happened? The home appraiser returned a value that was lower than the contract price. Even though we had 3 separate buyers making great offers, this poorly trained, non-local appraiser determined that the value was down at the asking price. Fortunately for all parties, we know how to handle this situation. We appealed the appraisal with the very information that we had provided the appraiser prior to the conduct of the appraisal. The bank agreed and all was good. But it doesn't always work out this well for all parties. Our seller was fortunate to have our experience and process working for them, or they likely would have lost out on several thousands of dollars that an appraiser wanted to take from them. This story is not unique, so you want to understand that there's definitely a difference between the market value as determined by active real estate agents and buyers and sellers versus a forensic value as determined by an appraiser. And not just the traditional appraisals, but the digital ones too. Have you used any of the online home valuation tools? These automated tools on the internet can spit out a valuation on your home in less than a minute. If you want to see how they work, I've included a link below that will give you 2 separate instant valuations of your home anywhere in the U.S. You might think I'm about to warn you to steer clear of these tools, but that's not the case. I encourage you to look at these when you're surfing and home shopping online. They offer a decent comparison shopping insight that most consumers need when they're getting started. Of course, I would not encourage you to make an offer to buy or sell based upon an online home valuation, as these are not going to be accurate. What they do provide is a relative comparison tool between similar properties. They do not take into account property age and condition, and they often fail to value amenities like swimming pools, yard size, and frontage, like the difference between being on a lake or golf course compared to an interior lot. But if an online valuation tool tells you your home has appreciated a certain percentage over the past year, that is most likely close to true market conditions. To give you an idea of how far off some of these automatic home valuations can be, all you have to do is look at what happened when the CEO of Zillow sold his home. In case you're not familiar with Zillow, it's an online real estate portal that makes a ton of money selling its users' information to real estate agents. When you give your contact information to Zillow, you're actually giving it to a handful of real estate agents too. Zillow has a valuation tool that it calls Zillow's Estimate, and I would say the estimate indeed. When the CEO of Zillow closed on his home, it had sold for 40% less than the Zillow's Estimate said it was worth. If the tool's that far off for the CEO, imagine how far off it might be for you or me. Here's what you really need to know about the current market value of your home. Just as a bank would never hire me to appraise your home, you should not hire an appraiser to provide you with the current market value of your home. Why? Because a great appraiser does not work with scores of buyers and sellers. He or she is not in tune with the current inventory of homes for sale. Appraisers spend their time looking at what has been, not at what is or what is going to be. A great appraiser can take a good educated guess, while a less than great appraiser is very likely to get it wrong. The home valuation that you're seeking when selling or buying a home can only be performed by a real estate agent who's actively working in the housing market and who has been hired by you to help you for that purpose. Remember, 90% of real estate agents are part-time and or rarely active, so you really need to take the time to interview agents for the job of helping you with your real estate transaction. Ask the agents to demonstrate their market prowess before you hire them to help you, as this is the one skill that all others work off of when it comes to putting money in your pocket. It's not enough to ask them to show you the value of a home or area. You need to be able to check them out online and see that they're really active in the current market. Remember, opinions are cheap. Unqualified opinions can be costly. There are many cheap market analysis tools that real estate agents can use that make the agents appear competent. But go out and see what past customers are saying about them to ensure that they are the right fit for you. A great real estate agent will have hundreds of past customer reviews on Google. Find one of these agents to help you find the true market value of any home. Do you want more great tips for home sellers? I've got a list of them that you can see by clicking the box at the top left, or click the box below it if you're looking for great tips for home buyers. Please remember to like the video and subscribe to our channel too.